Good afternoon, everybody. I'm back. And I am still an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. I've been doing that disclosure a lot more than usual recently. Position disclosure here. I liquidated Airbnb this morning, and I traded some T-Triple-Qs today, but I didn't keep any of it overnight. I was to the short side. Everything else is the same positions, just different sizes. So let's talk about today. What can we learn? What can we learn about today's trading session? All right. So first of all, how do we close? Well, these are the numbers that are including the uptick after hours off the NFLX report. So right now it's a 1.5% gain on the day, but again we're up a little bit from where we closed because of NFLX. Q, same thing, 1.5%. IWM, same thing, 1.5%. So no obvious relative strength or relative weakness on a percentage basis in the indices. And you guys can hear me, right? Usually somebody says hello or something. Just want to make sure you guys can hear me. Okay, cool. Yeah, so pretty wild day today. This was a big gap up this morning, and that big gap just is tricky. It's not normal for the market to be having 2% plus gaps seemingly every day. Yesterday was a really big gap up that the market spent the entire day digesting. There's a little bit of that initial, this is yesterday, right? A little bit of that initial opening squeeze, and then we digested that gap all day. Then boom, today, second really big gap up. The more this happens, like as this becomes a day 2 or a day 3, the more difficult it is for it to hold up. So we presented 4 different potential market scenarios for what could happen today in the morning meeting, and I basically assigned a probability to each one. I said that what I felt was the most likely thing that was going to happen is that the market would initially price/time correct down into the equilibrium area on the 5-minute chart. That's what we're looking at initially. And once that price correction basically occurs, we'll see if the market can give a pivot or attempt to give a pivot. If the market attempts to give a pivot, that then makes the opening high and that pivot low extremely important for kind of going forward. The market can be really strong today and still kind of sell off at the open if it's just corrective action on the large degree of upside extension. And I'll tell you, the incredible thing about this is that the EDMA only touched price at 9:55 a.m. today. And then I just have the Qs up right now. It could be the SPYs, the IWM. They'll kind of traded pretty much in tandem. Actually, the Qs were weakest off the open. We only touched the ADMA on the 5-minute at 9:55 today. It took 25-30 minutes for the market to correct to the ADMA, and that's through price. If we went sideways up here, it would have taken even longer. It just shows you how massive that gap was. That gap really takes away long opportunity. So what we said was, if you have any interest in longs, first of all, ideally you're already long from the call-outs from Thursday or the call-outs from yesterday, and you woke up this morning like I did to a very pleasant surprise, and you're booking profit into that pleasant surprise. That's the ideal scenario. But if you're looking for longs today, you really need to be patient off the open and see how the small time frame extension gets satisfied. And then when we see that pivot come in, you could attempt longs off of it. And once that attempted pivot comes in, again, that low and the opening high become key. And what happened? That opening low broke. And the sell-off became even more ferocious. Again, the Qs here were the most relatively weak in the beginning of the day. So if I compare this to a chart of the SPYs or the IWM, the Q sell-off is a little bit more vicious. But for the most part, our 5-minute correction led to a 15-minute correction. You can see that on the 15-minute chart. So we had a 15-minute correction here where the market again basically is now attempting to pivot at 10:30 off of a 15-minute correction. And this is the second opportunity for bulls to see if they can come in and kind of take a stand. And I don't hate, even though they both failed, I don't hate going long off of this first attempted pivot. Hopefully that bounce was enough to get your risk covered if you did it. And I don't hate the idea of going long off that second pivot. It's pretty much the exact same situation, just off of a 15-minute chart. And again, hopefully you were able to get your risk covered on that bounce. So, like, I mean, we made 3 long call outs today, or I basically did 1, 2, and 3. And they're at these 3 kind of important spots for the market where we can see if bulls can make a stand. And the first one failed, the second one failed, the third one worked. But we also recognize that by this point, and I think I even said it off this pivot, and certainly off of this pivot, the probability of a new high coming in intraday is extremely low at that point. So what I said to everyone who tried to buy this pivot for sure, and I probably repeated it on this one, was that if you're taking a long here, you got to recognize that the probability of a new intraday high today is very low. So therefore, your game plan should probably be a little bit more aggressive on profit taking than it would be otherwise. And that kind of, was pretty accurate. Pretty accurate. And then market was improving here a little bit. I wanted to see if we could break up, kind of get back above this 273. The big thing that I wanted to see at this time of the day was just how well or how poorly we close, because at that point I know that's going to be what shapes the daily candle. So, like, for example, we got this little consolidation coming in after this nice bounce. This is a higher low. We're potentially setting up an intraday reversal here. If we break up above 273, if we could have gotten a close at 274, 274.50, something like that, it's still not breaking new highs, but that would give us a really nice tail. Actually, the candle that you're seeing right now also includes the after hours price action. So this candle, this shape of this candle is exactly what I was looking for to see if that could happen at like 230 if we could break up. And then that would give you, a decent shaped candle here, potentially some sort of continuation tail or continuation hammer for us to really continue higher on this pattern that we've been kind of dealing with over the course of the last couple of days. Then the Apple news hit, and that failed. 235, here's when the Apple news hit. It hit Apple down, obviously, really, really solidly, and it hit the entire market down as well. And I was like, all right, well, that's out the window. I know Pat was saying, and I agree with him, as long as that we still are able to hold the key level from yesterday, which for Qs is kind of like 270, I guess. Spies were more, I think, 268, 368 is what Pat was talking about. That's not the end of the world, but I really wanted to see, I felt like a decent close of the tail here can really set us up for continuation. And we didn't get that, but the Netflix after hours might be given that extra jolt of energy that we need to actually get some sort of upside continuation. So we'll assess that a little bit further tomorrow. But going back to the morning game plan and kind of the assessment, that's strategy number 1, right? That's what we talked about, or the potential of a bigger momentum sell-off was, I felt, a little bit of a lower probability. But of the 4 situations I presented, this is the one that I felt was the highest probability, which is exactly what happened. And then we also could have gone sideways here. That would have been more bullish. That didn't happen. Or we could have had an initial short squeeze on this gap as well, particularly for some of the issuances that have large short floats. I felt that was a little bit lower probability, and if that bounce happened, it would be short-lived. So basically, the situation that we looked for as highest probability is exactly what happened. And then the market attempting to make this pivot but failing was really key today to then become more defensive on any longs that you might be looking for, and also to be looking at short setups. The short setups were certainly there today. I shorted the open. We talked about, even though I said in the morning meeting I don't love the idea, and then I went ahead and did it anyway, of looking for like a momentum short kind of right off the open if we were seeing any sort of confirmation from it. I went after the Qs because the Qs were acting kind of weakest off the open. Particularly, I shorted T-triple-Q. It kind of gave this very quick uptick to like $21, and then I was shorting it like on the way down with my stop basically at highs. I got a really good price on it. All I was looking for on this trade, though, all I wanted, and maybe this is a mistake, maybe I should have been greedier, especially because I do have longs on. All I wanted was a short that could hedge me out on an initial price correction. So my game plan for my short was to get my risk covered and then hold for a move to the ADMA on the 5-minute. And that is exactly what I did. I covered almost, I think, at the low of this bar as the market was pretty much touching the ADMA, and was able to make a kind of a couple bucks for myself off of that. Some of you guys were a little bit greedier, which is great. And then this kind of continued into a trend, and you can trail that trend on the way down. Someone asked me this morning if I considered my initial TQQQ short to be a with trend or a counter trend trade, or maybe somebody asked me that in the class. And initially, when I'm hitting it, it's counter trend really on that time frame because of the gap. But by the time you get a high, you get a low, you get a lower high, and then once this low breaks, then you're with trend. So for people who stuck with that a little bit more, you could really start trailing. You could lower your pivot to here, you could lower your pivot to here, and then you actually probably never even get stopped out of that. You could probably even still have it into the close if you wanted to, even if you were kind of trailing it on a 5-minute chart, as long as you weren't super tight with it. So, yeah, so there was some really good shorting opportunity off the open, whether it was that momentum trade I took, or then we discussed, I know we talked about this Amazon inside 5 and down. They whacked this Amazon real hard here with some momentum, gave a really tight inside 5, and that was shortable. I know a few of you guys took that. that was a really good trade. The Apple one was more difficult because Apple showed so much relative strength here. I think a couple of you guys took this and got shaken out. I think it's a good trade. It's just unfortunate. The one thing that you should know if you took Apple versus taking Amazon, because I know somebody here in the VTF, I don't remember who, said, oh my God, like I took Apple, I didn't take the Amazon, and I got stopped out, and then it worked, and then the news came out, and blah blah blah. I think that this is a good trade. The one thing that I would really note is that if you were looking at taking Amazon on the break of the second bar to the downside versus taking Apple on the second bar to the downside, why is the Amazon trade better? The Amazon trade is better is because Amazon was immediately showing relative weakness compared to Apple. And relative strength and relative weakness is one of our layers of probability. Look at the first bar in Apple. Look at the first bar in Amazon. Amazon's clearly going to be the weaker one. So if you're looking for that inside 5 trade, and again, I don't think that there's anything wrong with shorting Apple on the break of the second bar here. I don't think that that's wrong. If you got stopped out, I think this is a good trade. I don't think you have anything to be upset about. You take good trades and they fail. But the one thing that I would point out that you want to try to pay attention to if you're choosing between names is the opening Amazon relative weakness makes this a little bit of a better trade. And then that worked pretty well. And then I think we actually called out like a long here with the market off of this. But the thing that I was worried about with the market, with some of these stocks. So like this is exactly where you want to see like Amazon pivot. I was just worried that the market itself was going to continue to go down, and if the market itself is continuing to go down, you're fighting the market. Maybe you get this little bit of a bounce, but the trade eventually fails, and that's what happened on that Amazon also. So cool to see that traders in the team here were taking both sides of the trade. The short obviously turned out to be the better trade there, but the long hopefully was enough to really kind of get your risk covered. So that was probably the best opportunity of the day that the gap gave, was actually taking those shorts, whether it was more immediately in the queues that I was in or Josh was in, or you were waiting for the actual setup to come in, like with the Amazon situation, the Apple situation. I'm sure that there are others that I can't remember right now. And then the market was weak and it was tricky, and then we were kind of trying to see how that pivot would come in, and then we called the pivot here, no follow through. We called the pivot here, no follow through, and then we called the low of the day, which I don't call the low of the day. I sometimes call out spots where I think that the market can bounce, and then that becomes the low of the day. And like I always say, I don't call tops and bottoms. I save that for the people on CNBC. People who actually want to make money aren't sitting around calling tops and bottoms. People who want to sensationalize things and get more viewers call tops and bottoms. So maybe I'll get more VTF subscribers if I'm trying to be like, yeah, like, bro, like, that's the bottom. But I honestly don't care if you become a VTF subscriber. I want people to make money. Or I guess I should phrase that a little bit differently. You should want to become a VTF subscriber, because we're working here to make you money and not just making sensational call outs to try to like look cool. So basically what I was looking at here was the degree of the sell-off into the gap fill. And I think I was particularly looking at the cues at that time. It was the degree of the sell-off kind of into this gap fill, just how hard this third wave or this third leg down was. Like this was leg 1 off the open, attempted 5-minute pivot, fails, that leads to leg 2, attempted 15-minute pivot, fails, that leads to leg 3 down, gap fill, attempted pivot. And it was the fact that it was gap fill support combined with the speed and the voraciousness of this third leg down into that gap fill that had me, right into the VTF. Like, hey guys, I'm looking for longs here, and I bought a bunch of stock at that price. And then I was pretty happy looking for this potential kind of real reversal to come in to see if I could get the good close. Then of course the Apple news came out, and that put a little bit of a damper on the P&L comeback I had into this bounce. Excuse me. Yep. Am I missing anything on pins right now, or is that just moving on NFLX? Pins is giving a nice rip. I'm trying to think if I have anything else to talk about. I guess that kind of covers it. And I guess the big takeaways, what I really try to do, just for people who are guests, what I'm trying to do in the afternoon meeting each day is do a review of the market and do it with a fair and honest review of the thought process that we had going into the market, for better and for worse, because it's a learning experience for all of us all the time, right? As we review what the market did compared to the game plan that we had, which I would go ahead and say that our morning meeting game plans are exceptionally accurate. Even with it being that way, it's definitely not perfect. But by doing an honest review of what the market actually did in conjunction with the morning game plan that we had is an opportunity to learn from day-to-day price action. And then what I really want to do is also kind of draw out lessons each day from that price action so that everybody on the team here can be learning from more or less real-time situations. So the takeaway from today would be understanding extension on multiple time frames from gaps. So that gap was just so massive to the upside today that it creates this extension on a 5-minute chart. It creates this extension on a 15-minute chart. And those are the things that we're looking for on where the market can defend. Can the market defend this 5-minute equilibrium after a 30-minute price correction to the downside? Like 30 minutes of time of a correction on a 5-minute chart to that equilibrium. Can bulls come in and defend? And then if that fails, or even if it succeeds, then you want to see the 30-minute. So I remember, as I say that, into this bounce, talking to you guys like, oh boy, like right here at 10:15 when we were still at the highs of this bounce, being very concerned at that time about the 15-minute chart. Because I'm like, yeah, we're really trying to bounce here a little bit, but this bounce isn't as vicious to the upside as I want it to be, and it's probably because the 15 is still so extended, right? And it's usually around that 10:15 time that your 15-minute chart becomes really important. So the best case scenario for bulls on this big of a gap up, fine, we price correct off the open on the 5-minute chart. We have that attempt at a bounce. It's going to be really hard to get big follow through at 10:15. Bouncing on a 5-minute chart with the 15 still being this extended. So like the best thing that can almost happen for bulls, I think this happened with like Bank of America and Roblox longs yesterday, is that then it kind of goes sideways a bit. You don't get that immediate satisfaction that you want on the rip higher unless it's an extremely strong environment. The better situation almost is that you kind of hold up here and let this ADMA on the 15 catch up through time, and that can really set you up for more continuation of actual price action. I think that's all I got for you guys. So I am happy to take a look at the questions, thoughts, concerns, names, life problems, relationship problems, whatever you guys have for me. I'm here. Oh, and you know what? Actually, before I get into that, I do want to talk about this Netflix real quick. And obviously, I've only taken a very peripheral glance at the earnings report so far. Stock's up 12% here after hours. Stock's up 12% here after hours. Here's a chart that's showing the after hours price action. Just incredible rip, despite and with that one super quick downtick. And then is Adobe still up? Yeah, Adobe's trading up also. Both of these stocks, and this is just on a real peripheral glance, like the earnings report looked okay. I guess Netflix, beat on the EPS pretty nicely, but trash guidance, or missing on guidance was destroying stocks. Even as the market was coming down in this bear market, even when companies were reporting like inline guidance, they were hitting the stocks back down. And now the last earnings season, that entirely flipped. And so far with this earnings season, it's still early. So far with this earnings season, it's the same thing that's actually happening here. And I actually think that's extremely bullish. It's early. I don't want to jump the gun on that. But the fact that these companies are reacting positively to guidance missing expectations, it just really shows you how bad sentiment has gotten and positioning has gotten coming into these reports, where it's not, if it almost seems like if the company's not saying like, hey, we're going out of business next week, then they seem to be holding up on it really well. So that's a really positive signal here that we have seen, starting with the financials, and it's still kind of continuing here with Netflix and Adobe. And like I said, it's still very early, but it's I think at this point it's starting to become something that we need to pay attention to. I don't remember what the exact statistic was, because this is the same thing that we were expecting going into the last earnings season. It's just that expectations for earnings are so low right now. The analysts have just lowered their price expectations, their price targets, their earning expectations on all of these companies to such a degree that when these companies, again, they're not like they're reporting just anything decent at all. The stocks are acting really favorably. And again, the last earnings season, I don't remember exactly what the data was, but it was something like in a typical earnings season, on average, a company that misses on earnings is down, I don't remember, 2.5%. And on the last earnings season, the average stock that missed on earnings was like up 0.5%. And that really is notable from a sentiment perspective. We wanted to see if the same thing was going to happen on this earnings season, and so far it is. Anyway, that's all I got. So first thing I'm seeing is a question from Chinggis. In regards to your talk on your game plan from Thursday last week to Monday this week, when you say that you were in profit-taking mode on Monday from the common gap up and then again today, was the game plan unchanged from Thursday? Yes. Can you also speak a little on why were you in profit-taking mode yesterday if the price did not make new highs in the daily charts? Because how big the gap was. So the first part of your question is yes. I'm 100% continuing to follow the game plans that I've established for my trades. There has been zero deviation from those game plans. And so basically what's going on, to kind of recap to understand your question, great, fantastic move here, right? I'm piecing out a stock on the way up all day on Thursday. On Friday, even though it wasn't great, I was buying back stock. You guys remember I had to go to the doctor on Friday morning? So I actually missed the open. I had some offers in the market. I actually was able to sell some stock even though I wasn't at my desk because I had some offers out into the initial pop on Friday. And then the sell-off was brutal, and I missed the brutal part of it. I got back like 11:30, something like that, and the market was here. And it was at that point I think I wrote into the VTF that I know we're acting really weak and we're down a lot, but I think that it's more likely that today's going to be a little bit more of a range day and we might kind of bounce back up. So I did add backs. I communicated. I did add backs. I did those add backs. Those are add backs. So I'm keeping original stop losses on them, and then we didn't close well, but I still have that stock, and I was nervous about it, as you should be on a weak close going into the weekend. But it's still a win-win situation, and I have rules, and I follow my rules. I follow my rules Like, honestly, I follow my rules at this point in my career, like, to a fault. I follow my rules. I will sometimes look at a stock, and because I've been doing technical analysis for a long time, I'll say, like, wow, like, this thing really doesn't look right, like, or I'm offered at a certain price. I don't think I'm going to get the fill. And I will basically always say to myself, I don't care what I think. I don't care what I think. I have a game plan, and I'm following it. So I basically follow those game plans to a fault. And you could almost say that's what I did on Friday. And I was saying to myself as we closed week on Friday, and I was thinking about it over the weekend because all I do is think about trading. As long as nothing insane happens over this weekend. I mean, you guys saw the stats that Pat posted just from the last 10 weeks, that there's just been 2 Green Fridays. And I actually think that that's an improvement. I would love to see what that stat is from the year. Because I'm pretty sure that the first, like, half of the year we only had 3 Green Fridays. And now in the last 10 weeks there was, like, 3 Green Fridays, and it was just by a little bit. Fridays have been consistently red. No one wants to take risk over the weekend. And I also think that we've seen those Mondays, though, tend to be better because the end of the world doesn't happen over the weekend. No nuclear bombs went off. I wish I was saying that in jest. And then the market performs better. And that's just kind of what I was thinking was, like, yeah, we certainly closed really weak on Friday, but I think that this market still does have Monday to prove itself. And then we had a 2% gap up or whatever it was. So I'm just booking profit into that. And then we did, nothing all day, and then, again, 2.5% gap up or whatever that crazy gap up was today. I was selling pre-market like crazy. You can go timestamp my sell marks in the VTF here because I was typing into the chat like, I just sold more Apple, I just sold more Amazon, I just sold more Snap, I just sold more Shop, and then same thing. I was reloading stock at key points on the way down. I reloaded some stock. I reloaded some stock. Add backs primarily, and just continuing to stick with the trade and create cash flow. So I hope that helps, Chinggis. What's that Netflix doing? 274. Zach stopped out of IWM by 10 cents, then it dropped $2 right after. Was that off the open? So the one thing I would note about that, oh wow, Google just got to 102. The one thing that I would note about that is exactly what I said about Apple versus Amazon. I shorted the Qs because of the opening weakness as much as I could see it. And then it became very obvious right after I shorted it, but I was able to see it kind of as I was doing it too, as opposed to the IWM. The IWM held in best. Compare the opening 2 candles in the IWM versus the opening 2 candles in the SPYs versus the opening 2 candles in the Qs. Strongest in the middle, SPYs, weakest Qs. So that's, you have the right idea with your trade, and then, same thing with the person who shorted Apple instead of shorting Amazon. You have the right idea with the trade. I don't think that these are bad trades. Just recognize your relative strength and relative weakness. Sorry, guys. I'm, like, losing my voice. I've been speaking too much today. Next is from my man Mark D. Question: when you are playing extension plays, what are your entry rules? I know you mentioned the 3 down legs and then the 5 and 15 minute time frame. Are you using a signal candle and then entry order flow? So for today, what time frame did you use for your first short entry? Yeah, so it depends a little bit on the trade. With today's trade, I guess a little bit more specifically, it was just the opening price action and how the 5 minute candle had formed at that time. So there was a little bit of, let me see what the timestamp was on that execution. I shorted TQQQ. Oh man, I'm sorry guys, I'm really losing my voice. I shorted TQQQ at 9:32 and 9 seconds. Triple Q. I shorted T Triple Q at 9 and just kind of followed my game plan on it. I shorted T Triple Q at 9:39. At 9:30, what did I just say? 9:32 and 9 seconds. So I had 2 minutes of watching the candle form. So it wasn't. I didn't hit it the second the market opened. I watched a little bit of that fluctuation. It looked like there was no real squeeze coming in. I was able to get very small risk. I don't think I would have taken the trade if I didn't have longs on. I do want to make that clear. I was a little bit more loose with the entry on, you know what, if I get stopped out, I don't really care if I lose a little bit of money. I'm getting a great entry point here versus highs. It's very small risk. I don't care if it takes a little bit of money away from me because I have all these longs on. The longs will be moving in my favor, and then I can reassess. So that's certainly part of my thought process. But basically it was a really quick uptick. The highs came in. I'm watching that it's just not continuing. It's pulling back off that $21, and I'm like, all right, I'm just going to take some kind of versus that high just to see how we price correct, and that was pretty much it. So that's how I did that. Other times though, I might be looking to short some sort of pivot that comes in, right? And we've discussed in the past in meetings the like kind of pivot or trend continuation pivot, or just general pivot setups that I'm kind of looking for. Like in this case, I'd be looking for some sort of like upside shooting star that might come into here, which did not occur, or like an inside and down. And the inside and down doesn't trigger properly, at least not with the T Triple Q, which is what I currently have up. Maybe the Spies or IWM did. I wouldn't have been able to short this because the inside bar that I would have liked to execute through to the downside as a potential pivot broke up first, so I would have missed that. I wouldn't have been involved. For me, that's I'm not taking that as a setup. I don't like this. I don't like the setup. And then when we bounce off the 15, even though I wasn't looking for it, if you're looking for this downtrend continuation here, here's your inside 5 and down that you could be able to execute. You can utilize as an execution point with a stop loss at this high. I know I didn't call that trade out today. I missed it. This I didn't call out either. Just the opening one I called out. So I hope that helps. I don't read when you say order flow, I assume that you're meaning tape. I don't think that you can read tape in ETFs. I think that reading tape is a stock specific thing. I don't think you can be looking at Qs and reading tape. I don't think even when tape reading was a successful endeavor, which I don't think it is anymore. You never wanted to read tape in the indices, because the problem with the indices is if you're reading a natural, like a lot of tape reading or order flow reading is looking for and reading natural buyers and sellers that are in the marketplace, that are institutions that are buying or selling or whatever. In the Qs, if a big index ETF like that, or even a sector ETF like XLF or something like that, it becomes an arbitrage opportunity. So it doesn't make you that money, right? So if there's a massive seller in the Qs, and you would have to be massive in order to be able to move that, to try to read the order flow off of what they're doing and make money from it. If the NASDAQ names are rising and that natural seller that you see is there that you're trying to short versus or whatever, if the stocks are rising beyond the point where the Q should be higher than where that seller is based on where the stocks are, there are arbitrage robots in the market that are just measuring all that, and they're just gonna blast that guy until there's nothing left, because it just becomes kind of pure clean profit for them. And there's definitely HFT robots that do that have the ability to be measuring the specifics of where the Qs are. The Qs are off by 2 pennies compared to where every single stock in the Qs should have the Qs actually be, and then they're arbing away that 2 cents very quickly. So definitely not order flow when it comes to ETFs. Matt giving us some information on LPI. From Ahmed. Stop loss is my life problem. I don't mean to laugh, just the way you're saying it. Stop loss is my life problem now. I am a very good loser but no matter which chart I am trailing, I get stopped out. So this morning I shorted AMD at 60.30. At 60.30? Wow, that's a heck of a price. Did it tail up? It looks like there might have, I mean, I can't even see the top of this tail on this chart. So it looks like it opened at 59.90, tailed up real quick. Somehow you shorted 60.30. It's a quick high at 60.49, and this trade works great. I don't see how you could get a price of 60.30. It's very hard for me to kind of read your trade on this because I don't know what was happening internally in this bar. I mean, let me look at I hate 2-minute charts, but if I look at a 2-minute chart, maybe it can give me a little bit more clarity here. Oh, wow. Now I see what happened. That's crazy. Yeah, there's so much volatility here off the open. And you know what? Now I kind of remember it, actually. Even though I wasn't trading AMD, I was trading NVIDIA. I was watching AMD a little bit at the same time. I kind of remember this. If you shorted 60.30 within the first 2 minutes, and you put your stop at this high of the high of the bar at that time, it's not even closed, and you got shaken out there, that's crazy. That's crazy. Let me read the rest of what you're saying. And I set the stop at the high of the bar. I was looking at the 5-minute, which hadn't closed yet, obviously. I got stopped out by a penny. I understand every trade outcome is random, but considering poor execution, what should I have done to execute probably or profitably? However, if you're going to tell me you should have waited for the close of the opening bar, I did that. No, I don't think you should have waited for the close of the opening bar. I actually think that your price is too good, but I'll circle back to that in a second. I did that on my trade in the IWM and got stopped out. Okay, so no, I don't think that you need to wait for the closing bar. That would be the close of the bar. That would be the first thing that I would say. Look, I don't know what to tell you. This is crazy that you got stopped out of this. I said it the other day. I think that it's a really, really, really bad thing to do and a really bad habit and a really bad mindset to ever attribute like anything towards luck. But we're working in a game of probabilities, so I don't think that success in trading in the long run has anything at all to do with luck. But I do think that an individual trade, you can get a little bit lucky, you can get a little bit unlucky sometimes. If you're a long stock and news just comes out and it's in your favor and you make money, that's pure luck. Or the opposite happens, it's pure bad luck. And I would say that on this one individual trade, the fact that you got shaken out off of this high when you had that good of an execution and then it came back below 60 is incredibly unlucky. And then the trade obviously really works. So I'm sorry, that sucks. I don't really have any other feedback for you on that. The only other feedback I guess I would have is I think your price is too good. I don't know how you possibly could have shorted 60.30 here and had confidence to be short versus highs off of 60.30 when this thing started by ripping up. So it starts by ripping up. It puts in this high of $6.46. It comes down 16 cents after that big of a move and you're shorting. It's so easy for you to get shaken out of that. And that would be my initial feedback, actually. Like, oh, yeah, you shorted too quickly here. It was just like volatility. You didn't have confirmation. I think that the right entry point would be to short back through 60. 60 is a big daily level. 60. We spoke about the $60 level in AMD pre-market. I think that the right way to have traded AMD today... I guess I don't need that. What do I need? A 2-minute chart? I think that the right way to have traded AMD today would have been to short through $60, not where you short. I literally think that your price is too good, and that's actually a bad thing because I don't think that you really had the trade there. $60 is a big level. Fine, they rip it up off $60 off the open. Now it's failing. It's coming back below the level through 60. Anybody who bought in this first couple minutes here above $60, they're all out of the money. This can easily lead to a wave of selling to the downside, which is eventually what exactly happens. Your price is too good. You should be shorting 60. You should have lost more. Because this is so crazy that this came back through 60, tailed back up, made new highs by a few pennies, and then failed. So you're losing money in this thing no matter what. But I think that the problem actually is that your execution's too good. And again, this is like a crazy thing to say to somebody, right? But it goes back to the things that I'm always talking about. Let's say that this trade just worked. If this trade just worked, you shorted 60-30, you never get stopped out, it works just like it did, and you made really good money, I don't think that you did a good job, but because of your price. I think your price is too good. I think you need to be focused on what the daily level is, that the daily level is failing, and then you're shorting back down through it, and then your trade fails by, you lose 50 cents on it, your trade fails, you should be pissed. Don't let that ever affect your trading, because that just totally sucks. And I got no better answer for you than that. But that would be actually the biggest feedback that I would provide to you, is that your entry price is too good. And if it never broke back through 60 and you got stopped out, I would say that you deserve that because your entry price was bad. You had no comfort. This is above a breakout level. Why do you want to be shorting above a breakout level? You want to be shorting because the breakout's failing. It's coming back through 60. That's, for lack of a better term, the confirmation that you're looking for, or really not even confirmation, the signal that the trade exists, because $60 is the level. Your price is too good. And then the IWM, it looks like you did the same thing. The IWM is the same feedback I would give to the other person who said that they shorted IWM and got stopped out. I don't hate your trade. I just think that you shorted the wrong index. The IWM was showing relative strength. You wanted to be short the Qs. The Qs were much weaker. I hope that helps. From high volume, the markets made a big move after the close yesterday and today. Does that mean anything significant? I don't think it means anything significant beyond that we're in a low liquidity, high volatility, $30 plus VIX environment where we're just seeing insanity. Guys, this is insane. This is insane. And honestly, if you're an experienced trader, this should be, for the most part, really good for you. You could maybe make the argument that the volatility is even a little bit too much. I kind of made that argument a little bit. It's like beyond the sweet spot of volatility that we want, but I would still rather this than nothing. So if you're an experienced trader, this is awesome price action. If you're a new trader, the volatility is so extreme that this is a very hard environment to be learning how to trade in. The movements are so big and so hectic and so fast that I think it's a very difficult environment for a new trader, but experienced traders should be able to kind of crush it. So, but anyway, I don't think it's anything significant beyond just where the VIX is and the liquidity situation, and this volatility has been so consistent intraday and overnight. Got you. Thanks, Mark. From Gilbert. At some point during the day, you said you don't like when the SPY is leading because I want the IWM to lead. If the SPY or the Qs are making a move that's not being confirmed with the IWM, it usually fails. So I don't remember where that was specifically because the IWM was actually relatively strong. But maybe at some point today, or I think yesterday I said it also. I don't remember. I really don't remember where. I don't want the SPYs to be leading the move. I want the IWM to be leading the move. And the only reason for that is because this calendar year, and this is one of the things that's constantly evolving with markets, but this calendar year, it's really been the IWM that's been the big tell on this market. The IWM told us that the high of the year was, that the high of the market was coming in at the end of 2021, the beginning of 2022. The IWM topped out in November 21. The S&P and NASDAQ basically topped out January 1st, 2022. It's just been, and I remember that so clearly, the false breakout in November on the IWM of 2021. We had this massive consolidation in the Russell that broke up in November and then 100% failed. And that was a really bad sign. The SPYs and Qs led by FANG names were continuing to hold in and grind up until January. This entire year plus, the IWM has been the leader. And that's been like on an intraday basis. That's been on a daily chart basis. So one of the things I've been pointing to that I think is a bullish signal for this market is the recent relative strength that the IWM is showing. We saw that, by the way. We saw that at lows in June and into this July rally. IWM relative strength was initially leading the way higher here also, compared to what the Qs were doing at that time. We're able to see it then also. So that's why I want the IWM leading, not the SPYs. The SPYs are going without the IWM. It's a much higher probability that rally fails. From Rex. At 10:40 this morning, you said you got long in Apple without confirmation. I assume that's based on a 15-minute ADMA correction, yeah. At what point would you consider to stop out if the market ended up selling without a bounce? Sure, so it depends a little bit on the specifics of the trade that you're taking, but basically you're just stopping yourself on lows, right? You shouldn't be buying, and I might have done this here, you shouldn't just be buying on the way down into the moving average assuming that a pivot's going to happen. You should not do that. You should let the pivot begin to manifest itself and then short off of that pivot. I was probably buying some on the way down, but the reason that I was doing that was because it was not a new trade for me. It was taking back stock that I had sold at higher prices pre-market and off the open. That helps. Okay, Mark has good success with the tape and the cues for scalps. Okay, cool. If it works for you, go for it. Sorry, sold some stock and I didn't realize. From Roger, how do you mitigate the security blasting down through your stop for larger losses? Doesn't the stop itself mitigate that? You know, you bought the stock, you put your stop loss in, it blasts through the stop, and you get stopped. Maybe you're asking me about slippage, and you can't. You just need to understand the security that you're involved with and the potential of slippage. That's what I was talking about in the class a little bit. I don't like trading stocks with large spreads. I don't like having to calculate the extra potential of slippage into the risk reward as I get involved in the trade. For me, that takes away from the trade. It takes away from my profitability. It takes away from my success rate. So that's why I don't like trading the Lockheed Martins of the world, which had that great move today. But you know, if there's momentum that just comes in and it blasts through your stop and you get an unusual amount of slippage, it just sucks. There's no other good answer for that, except you should be prepared. Like I was saying before, the general rule that I use, and this is a general rule, there will be outliers, is whatever the spread is of the stock that you're trading, double the spread and don't be surprised if you get that much slippage. If you're trading a stock that's got a 5-cent spread right now and you get stopped out and you get 10 cents of slippage, you shouldn't be surprised by it. And so, you know, more liquid stocks, tighter spreads are gonna limit that. Yes, Josh, it did. From PS, do you re-enter a trade if you get stopped out on a knee-jerk move? And if so, how many times did you try? You have to be very careful doing that. My general answer to that is no, I don't. I don't really re-enter the trade if I get like shaken out on a knee-jerk reaction. I always want a new setup. I need a new setup. I might stick with the name in that area and still like the area, but if I got shaken out, it doesn't always, but it should present a new actual trade setup for me to be able to get back in, and then I'll get back in. I don't like doing what you described personally because I in the past have had bad habits of fighting stock, and that has been one of the big progresses that I've made with my personal trading over the course of the last 4 or 5 years. But 5 years ago, let's say, yeah, 5 years ago, probably. I still was really battling with some demons that would have me battle stock. And for me, it's very, very easy for me to get in my own head. I get knee-jerk reaction out of the trade. Oh my God, it's going up. I knew they shook me out. I'm rebuying. I get stopped out again at the lower price. It goes up again. I rebuy. I get stopped out again at the lower price. Do that 5 times. You would have been better off buying it once and giving it significantly more room. I have done that. It's such a waste of money. It's an incredible way to churn. So, again, kind of just being a stickler for my rules, the way to counter that is to not give anything a second chance without a new setup. So, fine, it shook me out. If it shakes me out and then goes, fine, I don't make the money. I took a loss, trade worked, I don't make the money, suck it up. If it gives me a new setup, then I have a new setup where I can enter, and now this is the new setup, this is the new trade, I have the appropriate stop loss, and I can look to make money on it. That's for me personally. Hope it helps. And Pat looks like it has feedback on this also. Andrew S. On the opening bar above 60. What stock are you talking about? Above 60? Oh, AMD. On the opening bar above 60, you can put in a stop below 60 and let the market put you in. Yes, that's a great way to handle the entry, Andrew. You know it's above 60. You want to be shorting through 60 if the thing fails. So you put a sell stop into 60 to enter the position. I'm with it. Interesting. I think it was Amazon, the one where the trader got into early before the 60 level. Yeah, I think AMD. From Susan, it seems you always exit longs that gap up on opening tick. Am I understanding that right? That is my biggest quandary. What to do with big winners? Often get out on a slight pullback and then it resumes. Today, most things didn't resume. I got out of Airbnb entirely, but generally I'm not getting out of my position entirely into that gap. I am taking stock off, especially this big of a gap. I'm taking stock off. I got a gift with this huge gap. The market's going to be very extended because of it. It's very likely, even though this didn't happen yesterday, it's actually very likely with this type of gap that you will get the opportunity, if you're selling at the open with this big of a gap, to be able to get that stock back at lower prices. And I'm not getting out entirely, so in the less likely event that it doesn't give me the opportunity to get the stock back, I've still got stock to get paid. So I'm not getting out entirely, but I am putting some money in my pocket. That's what I did today. From Cormac. Would you mind talking through the SPYs from 235 to 320? $235 to 320. Yeah, that's when the Apple news came out. 235 to 320, no problem. I bought SPY calls at the bottom of the first 5-minute bar and the second 5-minute bar, as I thought it was an overreaction to Apple's news. SPYs were making higher lows until 305, and then at 310 candle I got shaken out as it closed lower. Okay. Got shaken out as it closed lower. Was my stop thinking in the wrong place? Was the trade just too risky? Yeah, so a couple things. My thought process agrees with your thought process on the Apple news potentially being overdone. And I thought that because we've already seen that news come out. There's been headlines and rumors and whatever coming out pretty consistently for a while on Apple's iPhone 14 production not being great. So I agree with your thought process. I also would just be very careful. This is a negative Maribozu candlestick that closes on lows on volume. You gotta be very careful just buying this. And if you are doing it, you got to do it with very small size, because there's no way you can know what your stop loss is after this first bar or after this second bar. The better execution is off the third bar. Third bar, tails, volume increases. Now it's on the way up and you have a level to trade versus. So generally, even if you're trading counter trend or counter momentum, you still want to be trading in the direction in which the stock is moving on the execution. So it's coming down, you're looking long, what this closes at lows, this closes at lows, careful catching a falling knife. Here is a pivot point, you're better off buying on the way up than utilizing that as your stop loss. What I don't understand, SPYs for making a higher low until 305, a higher low. Are you just looking microscopically, like this low versus this low? I think it's way too small of a time frame. Or are you looking at the low here versus the low of the day, which is a higher low? If it's the latter, which it sounds to me like what you're talking about, if you saw this as like a higher low, which first of all didn't have confirmation because no new high came in, and you raised your stop to there, and then you got stopped out at this bar, I really think that's I don't like the stop loss. I think you're keeping it way too tight, and I think that you are over analyzing this micro price action in here without confirmation. I think that you could only even consider raising your stop into any of these higher points here, which I don't like the idea of doing that honestly to begin with, but I think you can only even consider doing that if the high from 255 breaks, which is the reactionary high. So breaks down, gives you a reactionary low, gives you this reactionary high, and now whatever is happening in here, only if a higher low is in here that is confirmed by a higher high because the 255 break comes in, can I really think that you can consider raising your stop to a higher point within here. And personally, I think all of this, even my analysis, is too microscopic. I'm a little bit bigger picture than that. I'd be having my stop here no matter what, probably, and trying to get my risk covered and leaving my stop loss there. And then again, fine, maybe when this is breaking up at 325, you could raise your stop to this slightly higher low at 315, but I really think it's generally too microscopic. So I hope that helps, Cormac. All right, team. It is 10 after 5. You guys are working me to the bone. Starting to lose my voice again. No problem. So I think we'll wrap things up here today. I hope everybody had a great day. I don't think that the Monday or Tuesday price action this week has been particularly easy, but the thing about the market is that you can't dictate to the market what the price action is going to be like. Sometimes they're easier, sometimes they're harder. So the biggest takeaway is that no matter what that environment is, that there are these core principles that we need to be paying attention to for our trading and for technicals and for everything else. And even if these last couple of days have been trickier, we've had some really good trades, some really good thoughts, and some really good opportunities to learn, and I hope everybody's taking advantage of that. So have a great night. I will see you all tomorrow morning, where we will do what we do every day. Assess the new news, assess the gap, figure out how we want to position ourselves, think about our probabilities for game plans off the open, and try to make money. Have a great night.